Well, hello and a very warm welcome to another in our series of Choice Words, chance to talk to key decision makers in the world of UK fund research, fund selection. I'm Julian Marr, I'm Editor Director of Wealthwise Media, and today I'm delighted to be talking to Matt Ennion, Head of Collective Research at Quilter Cheviot. Hello, Matt.
Thanks, Julian.
So let's jump into my first question, two-parter. What most interests you, excites you about the current investment outlook? What gives you pause for thought?
Thanks, Julian. Yeah, thanks for asking me along. Yeah, it's a really volatile market out there at the moment. So as usual, there's a lot to worry about, as you know. But I think one area that particularly excites us, and it's an area of the market that we're slightly overweight in our portfolios at the moment, is emerging markets and Asia as well. And we've just come back from a research trip over in Asia. And it's really noticeable how positive the environment is out there, how dynamic the economy is, and how things are really moving forward, which you wouldn't necessarily get from the commentary you read over in this country. You know, I think speaking to a lot of fund managers out there and just people on the street, the consumer's very confident. The shops are busy and full, and queues out the door. And I think speaking to fund managers, a lot of businesses are really taking hold of AI, and that's really feeding into businesses and making them a lot more efficient. So I think there's a real positivity out there, and I think given where valuations are at the moment in China particularly, I think it's a really interesting area. And I think counter to that, on the sort of more worrying side, I suppose I would think domestic UK just looks quite troublesome at the moment from an economic perspective, and within that I think UK small cap, as much as they are cheap and have been for a long time, and we've seen some sort of takeover activity there, it feels difficult over the next 6 or 12 months to really get excited about what's going to drive that forward, even though longer term potentially there's some good value and to be had there.
Well, thanks for that. And as the co-author of Investing in Emerging Markets, The Brick Economies and Beyond, available in all good skips behind second-hand bookshops now, do buy it, 2011. I'm delighted to hear that first part of the answer. Moving swiftly on then, what do you most look for in an individual investment, and what do you see as red flags?
Well, I think in terms of what we look for in a good investment, as we're fund investors, we do a lot of research in funds. I think there's obviously a lot of key things that you have to look for, but for me, it all comes down to the quality of the fund manager that's managing the portfolio, and really getting under the skin of the manager and understanding how detailed they are, how well they know their companies ultimately, and not just knowing the companies, but understanding where the value is in those companies and how you can sort of get that value or realise that value over the long term, and being really proactive in trying to drive that. So I guess an example for me would be someone like Alex Avides, who obviously used to work at Joe Hambro and has just recently started at Jupiter. But I've done a lot of work with him over the years, and he's really got that depth of knowledge, and it's reflected in the performance that he's generated over the long term. So that would for me be a real key sort of focus of when we're picking funds. In terms of red flags, again, there's a lot of things you look for, style drift, things like that. But I guess one thing that sort of worries me a little bit is around sort of momentum funds and funds that are growing on the back of trends. And so I guess an example would be in the growth markets pre-COVID, where there was a lot of funds that sort of performed well. Often they would be back on the back of perhaps newer fund managers that you may not have heard of, and they just sort of, after a couple of years of performance, they're out there saying, this is a really good fund, good managers, and you just question how much of that is just pure beta and they're looking to raise capital, or whether there's a bit of alpha in there as well. And that's sort of our job, obviously, to pick that up. And that's sort of one area of a real red flag. What's driven by momentum, what's driven by real alpha generation.
Good answer, great. Thank you for that. Totally unconnected, of course. I'm going to move on to what's being driven by momentum and the marketing departments. To what degree should investors, and by extension those who advise them, be looking beyond the so-called traditional investments, bonds and equities, into more alternative arenas? And are there any alternative areas that you are looking at?
Yeah, it's an area of focus that I cover, that sort of private equity infrastructure, and we largely use the investment company sectors to get exposure there. And I certainly think professional investors should be using those spaces. It's not necessarily for all clients, and we need to understand what clients' needs are, and ultimately. But I think diversification is really important in portfolios. So to get some exposure to absolute return funds or infrastructure, private equity, those sorts of sectors are useful at times within portfolios. And certainly if we see drawdown, something like an absolute return fund can be quite helpful. Admittedly, some of those haven't worked particularly well, but with good research team we have, I think we've selected some good ones there. So that's certainly been helpful for some of our clients at times when it's been needed. Thinking specifically, I think private equity is certainly an area that's sort of grown obviously over the years. It's been a market that's been around for 30, 40 years really, so relatively new, but it's grown significantly to $1 trillion industry now, and a lot of businesses are staying private for longer. You hear that a lot all the time. So to gain exposure to some of those top quality companies is important for clients, and clearly there's trade-offs between the type of structure and how do you access the investments there, and also liquidity. Clearly they're not so liquid, some of those investments, so you've got to understand if clients can withstand some of those risks. But it's certainly a market that there's new sort of structures potentially coming through, and we're doing a bit of work there to understand the impacts of those and how they may take hold. But it's certainly an area that I think we should be exposing clients to, where it's the right thing to do.
Thank you. Let's go on to client communication. Quilter Cheviot's been pretty on client constant for some years now, and I'm not just saying that because one of them's in the room, but what drives your approach to client communication personally? Is there anything you brought from your previous job to this one, or how you fit with that?
I think it all comes back to trying to meet client needs ultimately. Trying to help clients move through their investment journey and deliver on the outcomes that they require. So we've got a big research team that does a lot of work and can sort of generate good ideas for clients and putting portfolios together for clients. So we work quite extensively with our investment management team, the advisor team as well, and go out and talk to clients and try and help them understand some of the investments they're making, the investment environment, and how they can sort of meet their requirements ultimately. What do they need to do to meet their requirements? So we work quite closely with those teams to try and help achieve that within Quilter Cheviot.
Excellent. More personal question now. What was your path into investment, and in a parallel universe, if you hadn't taken it, what would you be doing now?
I don't know what I'd be doing now, but it was quite okay. It was pretty much straight out of university, to be honest. So I went to Liverpool University, studied economics there, came out and sort of wasn't quite sure what to do. Didn't really know too much about the financial industry, to be honest. Spent a year in Australia playing cricket, so I played some good cricket. And I suppose that's, having come back from that, I got the opportunity to take a graduate role at Quilter's actually up in Liverpool, and spent 2 or 3 years up there sort of learning the investment management role effectively and the industry as a whole. So it was a really good sounding board for the role and understanding the broad market itself. And then I moved down to London in, I think it was 2000, and here I am today, sort of back at Quilter's, sort of a lot more focused than I was at that time in the head role of collective investment. So that's sort of my career. What I would have done prior, I don't know. I guess in terms of the crossroads of that period when I chose to join Quilter's, I was obviously playing a lot of cricket and playing at a reasonable level, and I suppose at that point I could have, gone and tried to make something out of that perhaps. But and that was something that I was thinking about at the time. I'm not sure I'd have ever been a superstar or anything like that, but it was certainly an option. Now whether that had gone well or not, I don't think I'd still been playing today though.
Well, there is that, but no, that's fascinating. Yes, it's utterly mediocre cricket. It's great to hear that. And if you survive grade cricket in Australia and survive till the tail, then you're doing pretty well. That's a good standard. Excellent. I'm always going to say, what's the biggest cricket mistake you're prepared to admit? No, the actual question is, what's the biggest investment mistake you're prepared to admit to, and what did you learn from it?
It's a difficult question, isn't it? Like, there's lots of funds that you pick that you think are good at the time and are generally good funds, and perhaps they don't work for whatever reason. So whether that's actually considered a mistake or not, I don't know. Some people would say so, others not. I think for me, mistakes are more around perhaps opportunity cost of actually doing the work and not actually investing, not committing capital, not having the conviction of missing out on return. So I suppose in that respect, I've been around long enough to sort of go back to the sort of Euro crisis just after the financial crisis. And I remember sitting in investment committees at that time, and this wasn't at Quilter's, this was at a different business where we'd sitting on a lot of cash and gold as well, and that had done us pretty well for a period of time. So performance was okay, but it's just getting that capital back into the market. How do you, trying to time that is very difficult. And you'd sit in committees month after month, and the data would look terrible, and you'd think, right, the right thing to do is let's stay in cash. But then I think it was sort of 2011ish, market started to rally ahead of all that, the data turning, and we would sit in cash and not necessarily commit. So you're giving back a lot of this performance. So I suppose in terms of learning, that would be a time where you would learn a lot around how difficult asset allocation is, how sort of economies and markets are not the same thing, and just trying to time markets is incredibly difficult. And I suppose ultimately, trying to stay invested, because it's that old statistic, isn't it, where it's those few days in the market that get a lot of returns. So if you're not in there, you miss them. So
Well, I think that takes back to the client comms thing. It's actually just making sure that the client is along with you on that journey.
I think that's right.
Yeah, and in terms of, I think in investment, mistakes only a real mistake if you keep making it. You can make it the first time, you learn from it and move on, but if it's all part of the process, then there's a problem. Okay, this is the oldest question I asked, but there you go. Outside of work, what's the strangest thing you've ever seen or done?
I'll go back to cricket, and I think it may not be that strange, but as a cricketer, it felt strange at the time, where there was playing cricket, club cricket, at a decent level. There was always in one team a batsman who would come out and not wear any batting gloves, which, when you think about it today, pretty much everyone wears helmets and protection. You padded up, but they'd always come out and bat without batting gloves. They'd have the pads on, but no gloves. Which, having been a batsman and broken numerous fingers, having done that, it put you on edge as a fielder just watching it, because obviously club cricket you get some decent bowlers and quick bowlers. So but he didn't actually ever break any fingers.
Well, I suppose he felt extra motivated. But did you ever ask him why?
No, I think it's just the fact that it felt comfortable. He didn't feel comfortable wearing gloves. It was restrictive, and as I say, I'm not. He never actually broke any fingers. So it's that sort of motivation not to get injured, or. So it was quite an interesting one, and I've never seen anyone else do it before or since. So it's it was a very unique situation.
It might be a secret. It's like that idea, the psychological experiment, is that the best way to make everyone drive safely is not to worry about signs or road markings, to have a big spike on the steering wheel. And if you're driving like that with a spike here, then of course maybe that was his view. He said, well, I've got to hit it. But no, fair enough. No, that counts. Well done. Back to the day job now. What do you see as the best and worst case scenarios for the future of wealth in the UK?
Yeah, well, it's a pretty topical subject, isn't it? I suppose, in terms of best case, it's largely around making investment, a part of the culture, I suppose. And certainly at a younger age, educating people to invest and, really look after their own financial futures. So, and that, ultimately, I suppose, comes back to government policy, regulation, tax, all those sorts of things, and really encouraging that sort of approach and making, advice more accessible. And that's something that I know we're doing at Quilter Cheviot, working hard there to try and make advice more accessible to our clients and clients beyond that. And so I think that's the real sort of positive outlook. If we get some positive
it's a beautiful
news
world.
there.
I'm signing up to that manifesto. I'll follow you on that one. What about
the
downside?
And the downside is, I guess, the opposite, I suppose. And perhaps we're nearer that side maybe at the moment than we are the positive side in the UK, in that, the tax system's pretty complicated. Regulations don't necessarily encourage people to save for themselves. So that would be the challenge, I suppose, and that's the challenge to us as a business at Quilter Cheviot, to really try and to move that forward and encourage people to invest.
Well, yes. Well, if you find a way, do let me know. I'll do the same. I'll send you a member. What else we got? What advice would you have given to your younger self on your first day in the job?
Well, I suppose it would be some of the stuff we've talked about, I guess, around certainly investing early as a youngster. That's one, I think, mistake pretty much everyone makes, and there's always a lot of things you can spend your money on. You don't necessarily have that much when you're younger either, and you grow up and have a family and buy a house, so there's always other things to think about. But even if it's just a small amount, just on day one, just invest some capital and do it regularly, put it into a tracker or whatever it is, and just leave it there, and over sort of a 30, 40 year career or whatever it might be, you know, it'll be quite a substantial sum at the end if you, you know, with a fair wind, I think. So that would certainly be the one thing I would have sort of, if I'd have had my time again, that's what I would have done.
No, fair enough. I think we used to do that every November. When I ran a consumer finance magazine, it was how to retire early. And you start off with all that sort of advice. The answer was actually, well, first build a time machine, then go back 30. Anyway, there you go. Last question. We call this choice words. Let's get some personal recommendations. One of them, ideally a book, can be investment. Doesn't have to be. And then the other one is a free choice. And believe me, we've had some free choices over the last few months. So what would be two recommendations?
I suppose for a book, if I was to go down the financial route, I'd probably say The Power Law, which Sebastian Malaby, I think is the author's name. It's all about venture capital and the history of venture capital, which doesn't sound particularly exciting, but it's written in a pretty accessible way, and it's brought to life by sort of engaging with the characters who have been in the industry from, as I say, 30, 40 years ago, right up to the current day, and you know, talks about the successes of, you know, Elon Musk and Peter Thiel and all these guys who's been successful, and then also talk about some of the businesses and that have done phenomenally well. You know, you have the Amazons and the Apples and all these things. Types of businesses, and then also some of the failures as well. So it's a really accessible but really interesting and engaging to learn about the venture capital world. In terms of sort of a free hit, let me go for a sport that I've got into quite recently, actually, called swim run. And it's sort of what the name suggests, but if you were to sort of describe it, it's like triathlon but without the bike and without the transition. So you turn up, put on your wetsuit, on your swim hat, your goggles and trainers, and then there's a course anywhere between sort of usually about 5 miles to, it can be 30, 40 miles, and you're sort of in and out of lakes and running around mountains and hills, and it's really friendly, a really new sport, pretty nascent. It's a growing sport. It takes you to all the beautiful parts of the UK, North Wales, sort of the Lake District, Scotland, so really nice weekends away, really good fun, and sort of get you out in the wild, and yeah, really enjoyable.
That is a good recommendation. Personally, I'm probably going to read the book, but I'll take you up on the book, but there you go. But no, that's fantastic. Those great recommendations. Matt, thank you so much for talking to us.
It was a pleasure, thank you.
And thank you very much for watching. Do look out for further Choice Words videos as they arise.